Hello, everybody. Welcome to this week's episode of the Debt Hotline. We're super excited for tonight's topic. My name is Hannah with Team Solo. And like I said, super excited to welcome our special guest, Feli Oikonomopoulou. I hope I said that right. Feli, correct me if I'm wrong. But we're super excited to welcome our special guest to talk a little bit about 5 tips that you can use to grow your wealth while managing debt. We've got some great questions that have been submitted to the Debt Hotline regarding this topic, and I'm really excited to introduce Feli again. So I'm going to take a moment to read her bio, and then Feli, I'd love to give you a moment to introduce yourself and fill in any gaps that I might have missed. So Feli Oikonomopoulou is the founder and CEO of WealthMeUp, which is a gamified, rewards-based financial wellness platform that helps people integrate investing and financial literacy into their everyday lives. She's a former financial services lawyer turned fintech innovator, and she's very passionate about using technology to close the wealth gap and make smart money decisions accessible to everyone. Before becoming an entrepreneur, Feli served as a legal counsel and vice president at the Bank of America, Merrill Lynch, where she advised on banking, finance, capital markets, and emerging areas like sustainable finance, fintech, and digital assets. She's also held legal roles at major institutions, including the European Investment Fund, the Central Bank of Greece, and Linklaters in Luxembourg and Paris. Feli, did I miss anything? Is there anything else you'd like to add to that bio?
I think that was all perfect. Thank you so much for that. Thank you for having me. I think there is some echo or not, someone says.
Oh, let's see. Jeff, if you still hear an echo, let us know. Chime in on the chat. It looks like he said, never mind. I have 2 windows open. Okay, perfect.
Yeah, okay,
so
excellent.
No echo on our end. Thank you for the heads up, though. And if there are any audio or visual issues for our live audience watching, please let us know. We appreciate it. So it sounds like we...
Yes, thank you so much for having me. Yeah, thank you so much for having me. Excellent bio and introduction. The only thing I would like to add is that because I have lived and worked in so many different countries, this really gives me a different perspective that I hope to offer today on how debt or investing is approached in different countries. And what I found surprising when I came to the US with respect to how to manage debt or investments.
And you are from Greece originally, spent some time living in the UK, right?
Yes.
How long have you been living in the United States?
That's my 3rd year.
So 3 years. And we were talking a little bit about this before we started recording, but you said that the culture surrounding debt and credit is very different in Europe versus the United States. Do you want to touch a little bit on that before we jump into our topics?
I mean, that's again my general feeling. I told you that I was not a specialist per se on debt, I'm more on the investment side. But one thing that stood out is really the credit limit, and that in Europe, at least in the countries where I was, you would never be allowed to borrow a lot of money, especially if you don't have if this cannot be justified by your income, by your assets, and so on. So a credit limit of around 3,000 or 5,000 would be the most I would see. And here in the US, you can even buy a car on credit. So this is a huge difference that I think that that kind of push unavoidably people to accumulate more debt. That is so easy. And then in Europe, I don't think, at least for me, it was never the case that you would not repay the credit card. You had a credit card to repay it, not really to borrow on money that you don't have. In most of the cases, again, that may be a generalization, but this is something that really stood out to me when I came to the US.
No, I think you're right. And I would just add to that in the US, I think that the financial system is set up a little bit to not really favor consumers. It's more favoring the financial institutions that offer credit to consumers. And so a lot of consumers will go into these deals, maybe not always super educated. And I don't think that US consumers go into these take out credit and loans thinking I'm not going to pay this back. I think that's always the plan, that they're going to pay it back. But life happens, and just the way that like interest and debt is set up in the US, like it can be hard to stay on top of everything, especially in today's economy. You know, things are a little crazy right now. And so I think it can be easy to just fall behind. I don't think anyone really goes into it thinking, oh, I'm just going to, buy a car with all this credit and never pay it off. I think people want to pay their debts. I think there is like a moral obligation for consumers that they want to pay it off, but life happens. And when life happens, I think it's really helpful to rely on the tools that are available to you to help you resolve your debt and figure out your next step. And so that's kind of what we wanted to discuss briefly in this podcast episode. And I actually have prepared 5 steps that consumers can use to help them build wealth while they are managing debt. Because
by the way, Hannah, I'm sorry, I do hear some echo now when you speak. I don't know if this is, I do hear some echo while you speak. I don't know if this is recorded as well in the recorded version.
Well, if
now it's fine.
If anyone watching is hearing any echoes, please let us know. I'm not hearing any echoes on my side, so
yeah, no, now it's fine.
Oh, okay, perfect. Well, yeah, just keep letting us know if there's any audio issues. But yes, so like I said before, we wanted to break down really quickly 5 steps that you can take, 5 tips that you can use to help you manage or to help you build wealth and maybe even get into investing if you are currently managing debt, because most people in the US do have debt. Most people in the US actually are dealing with credit card debt. I think like the average credit card debt amount in the US, like in an average US household, is somewhere around $3,000 to $5,000. So if that's the case for you and you're trying to figure out how to pay that off, but also want to try to start investing, like these tips might be helpful for you. And for our audience watching, I'll explain some of these tips in depth. Let's go ahead and share my screen. All right, so 5 steps or 5 tips to help you grow wealth while managing debt. The first is, if you are being sued for debt, be sure to resolve any pending debt lawsuits. So if you've gotten to the point, which most of our audience members are at this point where they have been sued for debt, if you've gotten to that point, it's really important to make sure that you respond to the lawsuit and reach out to negotiate and try to settle the case. Ignoring a lawsuit is going to be the worst option. It's going to probably hurt your credit even worse, make it harder for you to catch up on your debts, and therefore make it hard for you to build wealth and invest. So if you're being sued, make sure that you respond. Solo can help you do that. We can help you create a customized response document and file it with the courts for you. We can also help you negotiate with collectors and creditors to settle your debts and resolve your cases. So that's step number 1, tip number 1. Tip number 2 would be to prioritize high interest debt while you save small. So if you've taken out any like high interest like credit cards and you're trying to manage all of that, be sure that you set aside like a small amount of savings, even if it's just like $10 a week, that you can use towards investing. And there are lots of tools and apps that you can use to help you know where to invest that money. Feli's going to break down her app here in a minute to tell us a little bit more about where you could put those small amounts of savings. But if you're prioritizing those high interest debts to avoid having to pay that additional interest, then you should be in a good place to be able to manage that debt while still putting a little bit aside to invest. And this also helps you build a habit to keep you from relying on more debt if an emergency comes up. Let's see. Tip number 3 is know the difference between good debt and bad debt. So some debts are like assets, like a student loan or a mortgage. They help you with your future. Your mortgage is a secured debt, so your home it's attached to your home. Student loan, it helps you get an education. These are kind of considered good debts, I would say, whereas bad debts are typically credit card debts. Those debts aren't really they're unsecured debts, so they're not really gonna guarantee you anything tangible or physical. So it's important to learn to weigh your decisions when you're trying to decide what type of debt you want to get into. And I would say try to avoid getting into excessive credit card debt because that'll help you avoid high interest rates, et cetera, and be able to focus on building wealth and investing. Tip number 4, if possible, automate your payments. So this isn't possible for every banking institution or every like banking app. But if it is possible, and if your credit card allows it, try to set up automatic minimum payments and saving transfers, so that you're not relying on your pure brain power every month to pay off your payments, and you can kind of automate that and put it on the back burner while you focus on investing in strategic investing. And then tip number 5 would be use tech tools to help with the process. So one tech tool, like I mentioned before, if you're dealing with debt and you're trying to resolve a debt lawsuit, or you have multiple debts and collections that you're trying to resolve, you can use Solo to respond to a lawsuit or negotiate and settle the debt for less and save money. Other tools can help you with the investing side of things. And Feli, I wanted to give you a minute to tell us a little bit about WealthMeUp, your app, and maybe how that could help people in this situation.
Yes, thank you so much. First of all, I completely agree with the 5 tips. So useful ones, and like really the minimum that someone should do to get out of debt, but also start building a healthy and wealthy lifestyle, because building wealth is for the long term, is not just for tomorrow. So where our app comes in is at this stage where, first of all, you don't have to deal with any debt collections. You may have debt, but kind of a healthy debt. And at the same time, you want to start building your financial future. Yes, dream, learn, earn, invest. The whole concept is that you shop as usual. You shop at places that you like, and it's like you shop for your morning coffee, you go to the gym, you shop your clothes, you book a vacation. Part of the spendings get into an investment account. This part of the spending comes normally from the brand, as in the form of cashback or reward. But instead of receiving the cashback automatically or in the form of points that you can redeem later on and spend, instead of doing that, we invest it for your future. On the background, we operate an investment platform that in which we curate portfolios according to your needs. So they are completely personalized, and they are very well diversified. What does this mean? Returns may not be like huge next day, but also losses are not going to, like, they are going to be balanced. And this kind of guarantees or enhances the probability that in the long run your money will go up steadily, so you will steadily increase your wealth, and at the same time maintain a healthy lifestyle.
Gotcha. So can you tell me how like WealthMeUp is different from other investing apps like Acorns? Because to me, like when I learned about it, I immediately thought of Acorns. Can you tell us what differentiates your app?
Yes, of course. Well, Acorns is also a great tool for rounding up your spare change. The difference is that we partner with the brands that focus on your lifestyle, and we partner with them and we get cashback from them in order to invest it in your future. This means that it's not only a roundup, it's not only a few cents that we invest, but real money. Think like 5% on a $100 purchase. So the amounts that we invest are bigger, and we target your everyday spending.
Okay.
We find your everyday spending, yes.
So you partner with specific lifestyle brands, and then when people purchase something from those brands, you guys help them invest money that's like more than just like rounding up to the next dollar, right?
Exactly. And the difference there is that everyone is different. Like everyone is different financially, but everyone is also different from like a values perspective, like where you want your money to go. So we really curate an investment portfolio that fits your needs and your values. And your money goes there, is managed by us, and in the future we can also help you do more things with your money. We invest your cashback and rewards, but we also help you start building an investment habit, like the habit of investing regularly, which is basically a tip that I would add to the ones that you did. Like debt management, but also investments, should actually be a habit, something that naturally comes. You don't really, need to think about too much, but you should put it in your life like every week and take care of it, because it compounds, it piles up, and it really makes a difference 10 or 20 years from now.
I love that. And I think that that's super important to make investing a habit, not just something that you do occasionally when you're in a good spot financially. Like it should be a part of your everyday financial practices. I wanted to point out this stat that's on the WealthMeUp website. WealthMeUp. I keep saying WealthMeUp. It's on the WealthMeUp website, which is wealthmeup.ai. But you can also download the app on your mobile, right, to use it there. And I think that's kind of really how it's designed to be used. But I wanted to point out this stat on here. It says that 80% of women drive consumer spending, but only 36% of users on major investment platforms are women. So there's this huge gap between like consumer spending and investing, specifically for women. And as a woman myself, like I think it's really important to know about this and like have these tools available to be able to know how I, as a woman, can invest and use my money smart. Any thoughts on that, Feli? Because you're also a woman, so I'm sure you have something to say about it.
Yes, that's true. And the whole product is the whole app and concept is a product of the fact that I'm a woman, and I wanted to see opportunities in my everyday spending and lifestyle in order to invest, because investing is just not made for women in the current environment. That's how I felt. It's true that women drive the majority of consumer spending. 14 trillion is spent by women, is put to the economy by women, but women are not as represented when it comes to investments. And this is like a vicious circle, because um, as a result, investment platforms target more men, do not target their products to women, and CPG companies, retail companies, target more women. Where this leads us, like, women spend more but do not invest for their future, which means, because investing compounds, which means that even if we bridge the wage gap, if we don't bridge the investment gap, the wealth difference is going to just continue and accumulate between genders. Yes, so the way that we have found to address that is by embed finance and investing where your everyday lifestyle and attention is. And this is why, compared to Acorns that you mentioned before, we intentionally partner with brands that where primarily women want to shop at. What we found out is that, especially in the US, is not that much, there is this myth that women don't know about investing, and it's really a myth in my experience. Women do know and understand investing. It's not really a priority in the to-do list, given that women have to take care of so many things, that at the end of the day, investing is really at the bottom of this list. That's why we try to bring it, to make it part of the list and part of the things that you would anyway do. And this is how you make investing or finance really accessible to everyone.
I love that. Make it a part of your everyday life, like you said, because if you're already spending money on brands that you love, you might as well figure out a way to couple that with investing. So I love that WealthMeUp is doing that. Well, we've got about 10 minutes now to cover some questions, and we have several that have been submitted beforehand that I wanted to bring up. And Feli, we would love to get your thoughts on these questions and your expertise. And let's see, I've specifically selected ones that were more involved with investing, to kind of try to play towards Feli's expertise. So we're going to go ahead and ask some of those questions now. Let me go ahead and add them on the screen real fast. All right. Okay, so first question is from Gail in California. It says, I want to start investing, but I still have debt and collections. Is it better to wait until I'm debt free, or can I start with small investments now? What would you say, Feli?
Yeah, well, my recommendation is start now. I mean, as far as you have, I mean, of course, um, paying off debt is the first priority, and never like miss a payment on debt, especially given the interest that is going to accumulate. That is huge. But as far as you have some money, start small, even with like $10 per week. Can you do that? $20 per week? Start small and start investing. Why? Because what you don't want to happen is that one day you have your debt repaid, and that's excellent news, but you have nothing in savings or investments. So you really literally have to start from zero. It's better when your debt is repaid that you already have built like some equity by way of investing.
Yeah, I agree with that. I think that there are ways to pay off your debt, even if it has gone to collections at this point, while still setting aside even a little bit to save towards investing, right? And I would say that as far as like debt collections go, if you have debt and collections scale, you can definitely contact us at Solo and we can try to help you resolve those debts. You can use our negotiation platform called Solo Settle to negotiate and settle the debt online without having to like call or wait on hold, wait on collectors to accept your settlements. So that's also a really good way to try to resolve the debt, get on a payment plan if it's in collections, and then use the excess money that you have to set aside towards investing. Let's see. We've got
I see a yes, I see a question on the chat.
Yes, we've got a question on the
If
live
credit
chat.
card,
Do you want to read it,
oh
Lily?
yeah,
And I just put it up here on the screen. It's
yes,
from Lindsay Ward. It says, if credit card debt carries an interest rate of, say, 20%, would you pay that off to zero before investing anything?
definitely repay your interest, like your debt first, especially credit card debt, because you should think about it this way: what is the return that an investment can make you? And on average, like as again, if you do well diversified portfolios, on average, it's going to be like 10%. So it's still lower than what you're going to pay in credit card debt. And credit card debt has the biggest interest rate. You should always repay that first, and then or on the side start investing.
Yeah, and I would
But
echo. Go ahead, Feli.
no, go.
Oh, sorry, we're having a little bit of a delay, but I was just going to say I would add one of the tips that we shared earlier, which is automate your payments. Like if you do have a credit card that has high interest, if there's a way for you to automate your monthly payment so that you're not accumulating more interest and having to pay that additional interest on top of just the regular credit card statement, that could be a really good way to avoid having to pay extra for the credit that you're taking. And it would also probably allow you to set aside some for investing as well. And then I would also echo like use tools like WealthMeUp. If you're already spending and using credit card debt to buy things, then you might as well invest at the same time. Cool.
Exactly.
All right, let me queue up another question. Here we go. All right, this one is from Mark in Florida. It says, my credit is trash and I live paycheck to paycheck, but I keep hearing I should be building wealth. What does that even look like for someone in my position?
Okay, that's a great question. And but this, so do you have like, yeah, I understand this is a difficult situation to be. Do you have $10 spare? Like, do you have $10 that you would, I don't know, that do you have like something that you do that you could like avoid doing, or like at least $10? It's nothing. $10 per week. Do you have them? If yes, that's your answer. If no, again, what we try to do through WealthMeUp is embed investing in your everyday spending. So whatever you do on your everyday, like what you have to pay, you accumulate. We try to give you like cashback that you can start investing with, like for free for you, through this everyday spending. Again, will this make you rich? It won't. That's the reality. You also have to start little by little, putting some money aside and start investing. Do you have $10 per week? That's enough. It really makes a difference in like 5 years from now, 10 years from now.
I want to back up what you're saying, Feli, specifically about like, are there things in your life that maybe you could set aside? Like, sometimes I feel like I am living paycheck to paycheck, right? But when I take a look at like my bank account and I'm like, oh man, I probably could have saved, a couple $100 this month if I hadn't eaten out so much. Or there are certain lifestyle choices that you can make to help you reduce the costs and make it so that you're not living paycheck to paycheck. And you're able to set aside even just a few dollars every week towards investing. And those little habits, like you said, Feli, like when you make them an everyday or a weekly habit, and it's not just something that you think about every once in a blue moon, but when it's really ingrained into your everyday life, that's what ends up making the difference. And that to me is what building wealth really looks like.
Exactly. And to your point, I mean, for a lot of people may have the feeling that I live paycheck to paycheck because my expenses are basically my whole income. So even this mentality of understanding your debt every month, repaying your debt, and then putting aside like a small amount of money to invest and see the difference can really make you rethink your whole lifestyle and whether there is some room to reallocate expenses.
Yeah, and it seems to me like apps like WealthMeUp are really helping you think about like your everyday spending habits and then coupling it, like I said before, with your investing habits as well.
Exactly. And also we operate on financial learning tool at the same time, like Duolingo for Finance, where our whole aim is to teach you how finance works holistically. So how debt and equity, like investing, works, or like deal with questions such as, I want to buy a house, should I buy or should I rent? And all these, like, there is no black and white. They are very personal decisions. So we cannot even fully answer the question about living paycheck to paycheck if we don't have the full picture of your like financial well-being and financial standing. These are so personal, but the rule of thumb is that can you start with a little bit, then do it.
Amen to that. Okay, we've got another question. We've probably got a time for a few more questions before we end. This one is from Tina in Colorado. It says, I downloaded a bunch of investing apps, but I don't know what I'm doing. I'm afraid that I'll lose money. Is there a simple way to learn the basics without getting scammed?
Excellent question, because there are a lot of scams out there. So definitely find an app that you trust. That's like look it up before, like make sure that you're not like just getting to the next tool, especially run away from anything that promises quick returns, big returns, become rich tomorrow, become rich in a month. Like this is the first red flag for a scam, or for a scam-like app. Then you don't know what you're doing. I completely agree with you. Yes, no one knows what they're doing, and there is no real blueprint for investing because investing is inherently uncertain. However, there are some guidelines that you can follow. Because we address people like you that don't know what they are doing, that's why we make it very easy for you, and we personalize the investments and we curate them as well. So you go through like a questionnaire, and according to your financial ability, but also to your risk level, risk tolerance, and values, we invest in a well-diversified portfolio. Again, the money on your behalf. So this is how we address that. I don't know what I'm doing. And I really agree with you. You should not know what you're doing at the beginning. It's intimidating at the beginning. You learn step by step, and you learn by doing. So that's the necessary first step to put your money. I'm afraid that I will lose my money. I hear that a lot, especially from women. Women are perfectionists. That's how I put it. They really want to know that there is a certain outcome when they do an action. And there is some uncertainty with investments. If you invest in well-diversified portfolios, again, you spread the risk, we all understand what this means. Like, you don't invest like in one company, or you don't invest like in a very risky asset such as Bitcoin. You're investing pool in funds that include multiple companies. So if one company does not go well, the others will do. So the risk is kind of spread. So you're not going to lose your money. So that means that in this case, if you invest in a well-diversified way, you're not going to lose your money. There is always a risk, like you may have a negative return on your money in the next year. However, historically, over a 10-year period or a 20 years period, your money will go up. Like, I think that historically, over a 20 years period, there is zero possibility that your money is going to have a negative return, that is not going to go up. And why this is very important, because guess what? If you just have your money sitting on a bank account, on a savings account, you're losing money. You're losing purchasing power because there is inflation. So investing them, at least make sure that you're not losing this purchasing power, you're not losing from inflation. And according to historic returns, investing in diversified portfolios ensures, nothing is ensured, but provides a 10% return on average.
I love that your app is specifically designed to take people's values and their personal lifestyle into account when figuring out where to best invest. So it sounds like they fill out a questionnaire as part of like as part of creating an account on the app. They fill out a questionnaire that will ask them about their values. It will ask them about like maybe what kind of monthly spending habits they already have. What other kind of questions are on the questionnaire to help the WealthMeUp team determine what kind of investment portfolio each user should have? What other questions do you guys ask?
Yeah, no, first we care about you as a person, and like, are you risk averse? You're not risk averse? Like, what's your income? Like, what's your financials? Do you have debt? You don't have debt? All these play a role in the portfolio that we are going to suggest. But then investing is really about putting my money somewhere that I believe in. Therefore, we do, and I see that grow. I see an industry grow. So when we invest in the stock market, we don't really see that. But this is true. Even $5 make a difference to someone's business or to a pool of businesses. Therefore, we do care about the difference that we want to see in the world, and we have curated portfolios that, for example, target more the tech industry, or target more environmental friendly companies, or target more the retailers where you shop. I shop from Target. I do want my portfolio and my investments to reflect my shopping habits, or portfolios that I want to support more women. So we do have portfolios that are more heavy on companies with female CEOs or female executives. So we care about the users holistically as persons, from the spending part all the way through the investing and then the learning. Yeah. So it's not that the whole journey is that really you get into the app, you get into the shopping experience, we provide you with great deals, you get cash back from companies that you already recognize, like, shop there anyway. Then we help you start investing in where you believe in. Again, this is the first step. The whole point is that you start investing your own money. And back to Tina's point, how do I know what I'm doing? First, you take the first step, you start, and then we educate you. We have like fun ways to give you tips to learn by doing.
I love that. And I think that's like a big thing. It sounds to me like with WealthMeUp, you kind of have an assistant holding your hand throughout the process. But what I really love about what you're saying, Feli, is that you guys really care about about your users, about the people who use WealthMeUp. You want to help them not just invest, but invest in something that they care about that aligns with their lifestyle. And I think that's super, super special and very valuable. Well, I think with that, we'll probably have to wrap up this episode. But Feli, thank you so much for joining, for your insights, your expertise, and sharing a little bit about what you're up to at WealthMeUp. Where can people find the app? what's the best way to learn more about WealthMeUp?
Yeah, we are live both on App Store and Android. Currently, I mean, it's always a work in progress, but currently we have over 7,000 stores on the platform, probably around you as well. And we have started accepting investments as well. You can also use the education tool and let us know your feedback. Also, you can find us on social media, LinkedIn, Instagram, TikTok, or just email us, hello@wealthmeup.ai, or at my personal email, feli@wealthmeup.ai.
And on the socials, is it all just WealthMeUp? Is that the handle?
Yes, at wealthmeup.ai. Yes. And let's get your lifestyles invested.
I love it. Well, thanks again, Feli. I wanted to end by just reading a little comment from one of our audiences, or one of our audience members who's watching live. It's from John. He says, I think this is a good philosophy. Just a little bit, just the first step, just $10. It's not overwhelming and it's very manageable. And I would agree with this. Like, even if you are in debt, you don't have to be some high profile rich person to be investing. You can build it into your everyday lifestyle, and tools like WealthMeUp help you do that. So again, thank you so much, Feli, for your time. Any last words before we end?
No, thank you so much. What you're doing with Solo is amazing. And it's amazing to see like how many things in common there are between how you manage debt, how you manage investments. I really agree with your comment that you just presented, that start small, and don't let this misconception that, oh, good debt management or investments is just for the rich, it's just for the wealthy, I will never be one of them, or something like that, let you down and let you not take this first step that will actually make you have like a wealthy life, lifestyle and well-being.
I love it. Well, thank you again, Feli. We really appreciate it. I'm going to just go ahead and close by saying, if you have any questions about debt, you can always call us at the Debt Hotline at Team Solo. We have a phone number that you can call in and submit your questions. They can be anything finance related, but we do specialize in debt typically. So the Debt Hotline phone number is 801-613-8181. Call and leave a voicemail, and we'll be going over real questions from real people every single week. And yeah, we're just trying to help as many people as we can. And if you have debt in collections, or if you're being sued for debt, head on over to solosuit.com. We can help you respond to the lawsuit, negotiate your debts, and settle and save money, and then get back on track to investing and building wealth. Thanks again, everybody, for watching, and good luck with debt management, with building wealth, with all of those things. We really appreciate you taking the time to watch this. Have a great night, everyone.
Thank you. Bye.